Where are we in the property real estate cycle?
Let's find out.
When we look at this whole diagram over here, right, it is a picture of the property real estate cycle, whereby there's going to be like boom, there's going to be bust, and there's going to be like when it's like going through a slowdown or recovery.
I mean, this is typical cycle. I think this happens also throughout even the stock market, even crypto market, right? Of course, this is very focused into the property market itself.
Yeah, I 100% agree. So the main reason, right, is that properties, right, or investment itself, right, it's not just purely based on valuation. There's an element of emotions added into this whole investment world.
And hence the cycle, right? So I think it's really pretty much to identify where we are at. Okay, so before we share with you why you think so, where do you think we are at now?
I think to do that, right, let's look at a bit more historical. Let's go back a little bit, before COVID. Okay.
Okay, so before COVID, I think let's just look at what happened before COVID. Before COVID, we are looking like 2019. I still remember the days in 2019 where we are able to walk into any showroom and there will likely be a unit for you to buy, and not only just
multiple units
units for you to choose, right?
Yeah.
I think in 2019 I was like going down to showrooms like Treasures, right? Going even like Florence, a lot of units there. Well, there's like 2,000 units in Treasures. There's like almost 1,000 units in Florence. I have no lack of choices to basically choose from if I were to buy a new launch.
But contrast that to today, right? Wow, it's almost a lot of projects are like very well sold, and like 75% sold on like the day of the launch. Wow, it's crazy.
So if I were to pinpoint before COVID where we are at, I would say we'll probably be around the 2 o'clock to 3 o'clock, maybe 2 or 3, where there is enough stock oversupply, right? It takes about 3 to 5 years. We're expecting to take 3 to 5 years for it to even be sold out. Yeah, and that's why I think before COVID that happened, right? I think then came COVID.
Yeah, so when we are talking about COVID, right? When COVID happened, right? Instead of like having construction costs being stagnant, right? Construction costs actually went up.
Exactly.
Because of raw material shortage and through like labor shortage. So actually, right, we have like progressed from this slowdown, right, more towards the slump or towards recovery because of the cost basis it has gone up.
I think the key question here is this. I really want to ask a very fun topic. What do you think if COVID never came, right? Do you think that the prices would have probably stagnant or dropped?
I feel that the property prices will have probably stagnant.
Right? That's what I feel so as well. But because of the pandemic itself, I think that's where there's material shortage, construction costs went up.
And there was a fundamental shift whereby everyone wanted more space. Even now, I think like it is more or less 100% work from work back to the office, right? However, I think everyone wants to have more space just in case another pandemic happened or what.
So now, then we went through the 2 years worth of the pandemic. Okay, during the first year, maybe a 3/4 year, right? I think government was a little bit more concerned. So I did not even see many, or I can't remember any government launches.
So our government actually decided to
not to launch, right?
To make sure that the market is stable. So it was a very prudent move, right, to ensure there's no oversupply in the market.
Exactly, right. So with no new supply that comes into the market, construction costs going up. All right. Then of course came the first launch. I still remember that day. It was a Penrose, if I'm not wrong. Penrose was actually launched during the pandemic itself, around the third quarter, right?
And then booms,
right? we saw like 60% sold out, which have not happened in a very long time. And I think this is a result of the lack of supply, all right, plus everyone knowing that construction cost is probably going to go up.
And at the point of time, right, even when you look into public housing like HDBs, right, there was construction delays.
Delays, right? Yeah.
So in other words, right, stock level was tightening.
Exactly.
It is tightening.
Yeah. So in 2020, we probably went from a slump-ish period, probably coming upwards to recovery. And of course, since Penrose launches, oh my god, back to back, right? It's like 60 to 80% sold out, 60 to 80% sold out for I cannot say every, but majority of the new launches out there, right? They were priced, of course, semi-fairly, okay? In the last 1.5 years now.
Yes.
It's been like that, right? And I would say that in the last 1.5 years, we are probably at the recovery stage.
Yes.
Right, where I'm seeing that,
prices has gone up.
There's very little stock in the market. Most importantly, rental have increased very, very significantly during this point of time as well?
My take is that rental has like gone up, right? Definitely, I have seen the rentals for my own units like gone up, and even so, right, I feel that it's not near the peak yet. Purely because, right, our economy has just started to open for like some months, and because of that, right, we are starting to see tourists coming back in. Just to give you some anecdotal situation, I went to Zi Cha place, right, and had dinner, and behind me, someone ordered a Caucasian lady ordered food. And we turned around and said hi to her. My wife was there, by the way, so everything's okay.
Okay, sure. Yeah, whatever you say, bro.
Okay. And we spoke to her, and it was her first day in Singapore itself.
Oh, wow.
And she was eating the Niang Tofu, you know, like, wow, unique, man.
Yeah.
Come to Singapore, try the local food.
Yes. I think, pretty much Singapore have opened up its borders, right, to majority of the countries. Without quarantine, that's very important, And that's why, of course, we do expect more tourists coming in, right? Singapore will likely get crowded soon. Of course, it's easier for companies to start hiring as well. So we are expecting more people coming in, and of course, that being said, it's good for the economy, lah.
Just to give you an idea, right, before COVID happened, right, there were a lot of like short-term workforce that came to Singapore on like 3-month passes, and they stayed like 3 months to 6 months, and it helped to cover like some of the working requirements in Singapore itself. And when they come in for this kind of short-term accommodation, right, it took up more space in Singapore. But now, and during COVID, right, everyone couldn't come in for like a week or a month or 2 months, right? Purely because you have to do the quarantine, the 14 days quarantine or what so, right? And when our borders reopen, right, I foresee that this workforce is going to be coming back into Singapore. And because of this housing
rentals
demand,
will likely go up.
Yes,
but it's insane now. I mean, I was just looking at Property Guru, and nowadays you want to rent any 4-bedder in like even like Sengkang, Punggol, it's going to cost you close to $4,000. Last time maybe like 2.5k, 2.8k. I still remember when I rented my 3-bedder at Thomson, right? It's like 3.1k. Now I think the cheapest listing for 3 beds, like 4,000, 4.5 probably, right? So insane. So rental have really gone up 40%.
You got regret you didn't buy or not?
No regret, right? Because I bought something better. Alright, so I think rents have gone up easily 30 to 50% in just in the last 1.5 years. We expect it to continuously go up in the short-term period.
In the short-term period.
Yeah, which brings us to where we are today. Okay, lack of supply, right? New launches are still selling up well. Okay, rents are still going up. So, but I would dare say that there's definitely today there are more buyers compared to sellers.
Having said this, right, in last year's December, right, something happened, right, which gives us a hard cap, right? I feel that it's a hard cap to our property potential prices, and that is a cooling measures, right, that happened that raised our TDSR?
Everything from TDSR drop. Technically, TDS drop means that we can afford smaller properties, right?
Lower
ABSD went up, right? For those people who are thinking of buying 2 properties or even foreigners wanting to buy property in Singapore, okay? So of course, then supply also coming up.
Yes.
So
HDB supply, and we are talking about
up.
private property, a lot more like government land sales.
Exactly. But with every measures, right, it takes time to really kick into effect to see the impact.
Yeah, the thing is, right, we also want to understand the intent of the measures. So when we look at like the increase in ABSD and the lowering of the TDSR ratio from 60% to 55%, right, the intent, right, is to make sure that when we are buying as investors or homeowners, right, we don't overstretch ourselves. In other words, it's a signal that the property prices are a bit high.
It is, right? So the key is this, right? If we were to put a number out of 12, right, during this cycle, to think where we are at today in the property market, what's the number, Ivan?
My number is 11.
11, I'm probably at a 10.5, right?
10.5.
So we are probably at 10 to 11 in scenario where there are now more buyers than sellers, right? Rental use are expected to drop, even though in the short term it still go up, short term, all right? But in the mid term, maybe in the next 2 years, all right, to 3 years, I think rents will go down. Why? Because very simple. If everyone now is buying at the 2,000 plus PSF for a typical new launch, we can expect that the rental use will drop because rents are not expected to continuously go up in the next 2 to 3 years to come. And that brings down rental yield because if you buy at a high price, rental probably stagnant a little bit, all right, in the next 2 to 3 years when these TOP or these completed, then we expect rental use to drop, right? Because rental is calculated by rent multiplied by 12 divided by unit price.
So the thing is this, if you ask me 1 year ago, right, I would say that buying a Singapore condo or a BTO HDB, right, is definitely a good choice. Purely because, right, when we look at the 3 years time frame, right, you will still need time, right, for construction to collecting keys itself and for supply to come online. So I think it's more of a 2 years, it will be 2 years down the road, right, whereby we may see a little bit of a decline or stagnant.
I would say stagnant, right, because I think the last thing Singapore government wants is the entire housing market to slow down to a point of almost a crash. That would be very bad for the country itself, because generally we are in a population where majority of us owns a home, and that is the last thing government wants, where everyone's unhappy, right? But that is why they are going to continuously put in cooling measures if property prices keep going up, even when more supply come in for whatever reason, right?
So that the rise will be sustainable.
So government wants a more sustainable rise, and therefore do expect more cooling measures to happen if property price continuously increase, alright, in the next 1 year to come. But my prediction is that we are already at a 10.5 to 11 mark. I think naturally it will probably start stagnating down in the next 6 months. I wouldn't say 1 year, right? Probably 6 months to a year. Alright, maybe the next couple of new launches might still do well because there's still, more buyer than seller. I think the next 2 to 3 new launches still do well.
Why?
We are in an environment where there are more buyers than sellers. No matter what, right? I mean, it still takes time to fulfill those demand. Alright, and of course, that being said, we are going to discuss what are the upcoming new launches and why we think that is a key factor as well to really stagnate down the prices, right? So do watch our next video coming up. Okay, then of course, most importantly as well, as I said, if government continuously put in cooling measures, your upside, no matter what, is kept to a certain extent.
So when we look at this whole property market cycle and we feel that we're about 10.5 to 11, right? What do you think are the possible things that we should be doing? Give us like one quick tip. Like, should we be buying a property itself or selling, or like should we be owning a 1 bedroom, 2 bedroom, 3 bedroom? What do you think?
I think first of all, don't panic. Singapore market is not at a situation where it will crash in prices. I think that just too many cooling measures out there to safeguard your investment.
So what do you mean by cooling measures is a safeguard to your investment?
Because the more cooling measures there is technically still a suppressed price point. Alright, if government ever release no ABSD, do you think property prices will shoot through the roof? I think 100% yes. Alright, so there are many things that the government can do to really stabilize the market.
Or even bring TDSR from 55%
back to 60. Just back to 60 is good enough. It's insane, right? So because of this, I think the market is stable because of the government's control in the market. That being said, with more controlled market, it just means your upside is also limited as well. You know what
do you think you should do?
What do you think you should do? I think that is where you can start looking at alternatives, right? I think there are a few things you can look at. Number one, if you guys are educated in the stock market, I think stock market is pretty low.
Yeah, man.
But be careful. Do still brace on for volatility. That's important. You need to have emotional stability to enter the stock market now. It's not the easiest time to enter, but I think that if you with strong emotional stability, you can dollar cost average downwards. You do not know where's the bottom, so hang on for that. Next, you should look at property markets. If you want property, you look at property markets outside of Singapore. I think that's something, right? Not all countries is at an all-time high like Singapore. Some markets in the world is still at a recovery stage or even slump coming up to recovery stage, where Singapore have gone through in the last 2 years.
That is absolutely right. So because, right, when I look at property investment, right, even though Singapore may be at a high, right, there will be countries, right, that are at different property cycles. They may be at a low or they may be recovering, right? And the important thing is that once we understand real estate investment, the concept of like leverage, the concept of like having principal paid.
Understanding that rental comes in based off your mortgage. These are all the basics, right? It's the same throughout the world.
And once we follow like good criteria into buying like properties that have like very good return potential, right? It's also okay to repeat this success, right, across different countries.
But the last thing you want to do is to hoard on your cash today, all right? Because we might be entering into a hyperinflationary period. Every single country is reporting all-time high inflationary rates, which means that you got to be careful with holding too much cash because that is a sure way to lose money.
Okay, that's a very good quick tip, is that instead of holding cash, right, which will shrink because of inflation, right, the alternative is to hold debt, which will also shrink because of inflation.
Yeah. So let's discuss more about that in our next few videos.
Yeah, okay, we'll see you soon, guys. Bye.